What's up, everybody? Real fast, hopped in here to break this down to y'all because a lot of people think that when they see this indicator that they're looking at two moving averages. But I'm gonna get straight into explaining what's going on here so y'all can have a better understanding of this and y'all can start winning y'all trades if you have this indicator. If you don't, and you took the course, I do teach how to do some of this without indicators. But for those of y'all who have the robot, let's get into it. Okay, so the first thing you want to notice is when you look at this, some people think, hey, is this just two moving averages? No, it's not actually. And I'm going to reveal the secret. Now, I'm not going to give you the full breakdown of the algorithm, but I will tell you what's happening. The first thing you want to notice is when you look at this is that there's lines in between. Now, if you put two moving averages on of the same kind, it's going to look exactly like this. However, this is going to give you a little bit more information because two moving averages are just going off the historical data of what the price was previously to the day that you're trading in. I don't know if people knew that. Now, if you didn't, you do. But the difference is the lines in between the two moving averages. What's happening here? Well, if you pay attention to every line inside of there, there's actually a candle that correlates, right? Yes, it's collecting data based off the price and telling you the direction of the price. Now, some people say, oh, indicators lag. Well, let me let you in on a little secret if you're watching this video, because I do give y'all the source. Because these people talk like they know it, but I know it because I'm actually developing these indicators with engineers. Okay, pretty much, just to let you know, if you are not trading, at a firm that is actually where these prices are being held and where these orders are being taken, your MT4, MT5, TradingView, I don't care what you use, it's actually 7 minutes behind the live market. So your price candle is actually lagging. So when people say indicators lag, they have no idea what they're saying, because if they knew that, they would know that the candles lag. That's why people like me, we don't even need to look at the candles. We don't have to trade the candles because it doesn't matter what the candles are telling you at the moment, because what you're seeing already happened. That's why I tell you guys, this stuff is rigged against you. So do what you can to rig it back in your favor. Now, candles are at least 7 minutes behind the live market. So when people say, hey, indicators lag, they're a lagging indicator. Your price is lagging. So watch what you listen to on YouTube in particular, but the internet in general, because people talk like they know these things, and anyone could get on here and start talking and act like they know what they're saying. Now, you don't have to believe what I'm saying. Just look it up for yourself. Of course, Google is your friend. But just trust me, be careful what you be listening to on here, because you will be listening to false information and you will be spreading it and you will be contributing to the 90% to 95% of traders who fail. Anyway, so let's continue. So if you pay attention, as the price is starting to become more dominant in any direction, in between the cloud, the ribbon, it gets fatter. When it gets thinner, that means the price is starting to lose momentum and it's starting to change. If it gets thin enough, it will actually cross. This means that the price is now reversing. Now, if you pay attention to this, the top of the cloud indicates what the price is doing. The bottom indicates what it is not doing. A lot of y'all didn't know that. And yes, if you look at the top, if you have shorts as red, any sell, the momentum on sells will turn red at the top. If you have it as buy, it could be green or blue. Mine is blue because it's my favorite color. Then it will be blue. If the top is blue, then it's buying. If it's red, it's selling. Yes, and the ribbon in between turns the color to let you know the momentum is changing that way. Why is this all important? Because it's training your eye to see this without the indicator. That's why I tell you every time I'm teaching you something, you're learning something, you're getting something when you buy these systems. Okay, so when you look at this, you don't even need the candles. We can see that we're in a long-term sell position, and I have no candles on my chart. Hey, that's impressive. Can somebody scalp and do that? Can somebody who says indicators don't work do that? Probably not. But once again, we are now at a level of the low of the day, and we are watching to see if it breaks. The reason I know it's going to break is because it has to create a new low, because it's going to enter a new day soon. That's one reason. The other reason I know is because, once again, look at the dominance of the sell position of the ribbon. The ribbon is telling us that the banks are selling off. And we are on Platinum Live trading for 6,000. Let me correct myself. I'm talking myself down. We are all the way up on the trade as far as the pips go. 6,760. Pardon me, I'm saying this wrong because the number's so huge. 6,736 pips. Just to be clear, look at the top right corner. You will see we are on the live market. Don't forget that part. Okay, don't forget that part. Don't forget we have the trade management. Okay, and that's that. So let me just get into a little bit of information before we get out of here. The Bank Series version 1 will be discontinued soon. I say probably by January. It is a little bit cheaper than the Bank Series 1. I will warn you, the Bank Series 2 has extra strategy added to it. The Bank Series 1 just has the strategy where price breaks below the ribbon or above and it takes that trade. The new version has this MA cross added, so you can take 2 strategies now. The old one will be discontinued and it's slightly cheaper. If you want to get it now while you can, because it will be discontinued soon. Why am I saying that? I'm saying it because whenever I discontinue products, for some reason, all of a sudden I get DMs from people who say, hey, I've been looking at that. I was going to buy it. What happened? Can I get it? I'm like, it's discontinued. I can't give it to you. The 20 pips and dip, I get comments about that all the time. I'm like, where were you guys at? I didn't even know you were watching that. That got discontinued because not too many people showed interest, and really because I just didn't have the time to promote it properly and to show y'all how it worked. And a few people did get it, but I felt like I needed to promote it and I didn't, so I discontinued it because it wasn't really fair to have it there and no one knows really much about it other than just saying 20 pips and dip. I like to actually explain everything to y'all and, you know, show it working live on the market before I put it out there. So I just discontinued it because it wasn't getting the love it needed. And of course, when I did, y'all would hit me up. Pip generator, 20 pips and dip, those are like the main 2 I hear about. And that's why I'm warning y'all now. So Bank Series 1 version 1, the original version of it, it will be discontinued. It's slightly cheaper than 2. It will get you into some winning trades. But like I said, if you want to get it now, because once it's gone, and I don't want to have y'all hit me up. Yo, man, I've been watching you since day 1, and I would like to cop the Bank Series. I saw you took it down. I'm like, were you like alerted to that? Because as soon as I take it down, y'all start messaging me and I'll be like, who y'all, man? Did y'all hit the like button? Did y'all leave a comment? Did y'all subscribe? Yeah, man, I've been watching since day 1. Remember that video? And I'll be like, whoa, bro, I didn't even know you was around like that. So y'all be watching. So if y'all watching, hear me now. Bank Series version 1 will be discontinued by probably July. So any day now. When I get around to being able to have the time to take it down, it will be taken down. So I'm just warning y'all. Okay, so with that. So once again, back to this chart. So is the bank ribbon actually 2 moving averages? No, it's a little bit more than that. It teaches you something, it's showing you something, it's collecting data. So these lines in between are collecting data to determine how strong the price is. And whenever you see these lines starting to get thinner, that means the price is losing momentum in that direction, and now it's going to turn the other direction. If you pay attention to the first MA cross, this is the new strategy that we added because people said MA crosses didn't work, so I started trading them, of course, because you know I love when people say something doesn't work. I'm one of those guys, I got to show you that wrong. You traded the first MA cross on that Thursday, you were looking at 584 pips before it reversed. Okay, 585 pips. You traded the third one. Let's just call this one a failure, but let's just say you traded it. You got 90 pips. Okay, but let's call that a failure. But at 90 pips, you should have been able to secure profit on that trade. If you didn't secure a trade that's in profit 90 pips, then you did something wrong. Now let's just say you traded the other one. Okay, boom, 350 pips. Let's just round it off to the bottom, 350 pips. So people say moving averages don't work. Okay, let's talk about that now. Out of these 3 trades, you would have won at least 2. Okay, so let's just say you for some reason didn't get this 90 pips. Somehow you got lost on that. And I'm gonna address this wick right here, by the way, because this was a trap. And I'm gonna tell you why I stayed in the selling everything in a second. But let's just talk about this for a second. Usually if you trade 3 moving averages that occur throughout the period of a pair, any pair you pick, excluding crypto, because crypto just ranges for weeks and months, and it's the most manipulated. But anyway, if you take 10, you're gonna win at least 7. Okay, and out of these 3, you would have won 2. Now let's just say you did a risk to reward of maybe 50 pips. Let's just say your stop loss was 50 pips. You take this trade, 500. Okay, let's just say 540 pips. Okay, you risk 50. That's a 1 to 10. So you risk 50 to get 500. Okay, this is for intraday swing traders. You scalpers, y'all probably like, why would you do that? It's an intraday thing we're talking about here. Okay, now let's just say you lost this one. Let's just say you lost this one. Let's just say for some reason you took this swing trade. It would have triggered here. and you just lost this 90 something pip trade, right? Let's just say you lost it. You 50 pips, it backed up 50 pips. It backed up 50 pips over here. So you kind of shouldn't have lost this, but let's just say you did for the sake of the conversation, right? So you have this 550 right here, and then you have this is the proper entry for this MA cross that you would have took, and you have 350. So we got 550, 350, 8 and 50, 900 pips. So you would have lost 50 pips here, and you would be left with 850 pips throughout these 3 moving average crosses. Okay, so people say that don't work, but you see I'm 6,000 pips on platinum right now on the live chart. Please do look to the top left hand right corner. You will see, if you look at the top left, I am live on platinum. Okay, boom. So I just explained that to y'all, right? This is why y'all got to be careful what you listen to. Okay, so simply, let's turn the candles off, but simply following the ribbon and entering where I entered at, you can see where I'm at in this trade, right? And I got 600 and something pips. So y'all could just see where I'm at right now, right? Okay? And the reason that that's like that is because the trade is stacked. And if you look at copper, look in the corner, you see I'm killing copper right now. You see I'm killing silver right now. I'm killing them all just from following the ribbon. So yes, two moving averages are gonna follow the same pattern as this if you use the same ones. You just won't have as much data. Okay, you can manually trade it, but this is going to trade it for you, and it's going to grab these trades for you. So as you can see, we will win in a lot of trades. Now the reason that I don't really lose too many trades is because if I'm taking, say, the trades down at this end, I'll close these. You know what I'm saying? But usually I won't have to worry about this because I'm already in over here. All right, so you don't have to worry about that too much. So if I unlock this chart and we go and look, you will see times when the MA crosses occurred. You will see it. Okay, let's zoom out a little, and you can see it. And overall, you see platinum has been selling off like crazy. I've been talking about gold in the Discord. It's been selling off like crazy. And as you can see, when you look at the gold, if you look at platinum over the last maybe month and a half, I caught half of the sell that's been selling off all this time. But once again, like I tell you guys, if you just simply follow the ribbon, you won't have to worry, guys. You know what I mean? Just follow the ribbon. And when it's not looking right, close your trade. Don't sit in it and get cooked. Don't let it reverse, because if you tell the robot to take one trade and it's the wrong trade, it's not going to take the other trade because it's in that trade. I tell my robot to stack my trades, so that's why I'm able to manage and catch so many trades. But I don't have to do that. But I'm going to show you how to get the quality trades. Okay, so the Pyrex Vision is 19 strategies. That's what we're looking at right now. It has all of the bank series in one, and we have some other stuff added to it. Now as you look at the top right of my chart, it says Pyrex Vision Expert 5, because the Pyrex Vision version 5 now trades supply and demand. Once again, we're looking at a trade now. If we have the supply and demand trade set up, it will enter this trade when it breaks this area. Okay, it will, because the law of the day is going to act as either a supply or a demand. And if it breaks, then we know it's a demand. If it bounces off, it's a supply. Okay, that means it was respected and buys now stepped in, giving it the demand zone that it could turn into, because highs and lows do turn into supply and demand zones. You know, so a lot of lows sometimes are respected, but we know due to the fact that the market is closing in a few minutes, this is going to create a new low. It has to. Okay, it's not going to sit still. But anyway, yeah, so that's pretty much the difference between moving averages and the bank ribbon. The bank ribbon has a lot more data in it. Every line is correlated to a candle, and every candle feeds that cloud and tells that cloud what's happening, and based off what's happening, the cloud reacts. Moving averages bend, but the cloud reacts. It lets you know the momentum, how much momentum it is in there. And also, just to clarify too, depending on if you're buying or selling what color your buys are, mine are always blue because blue is my favorite color. We can tell that simply looking at the cloud without the candles that we're selling. Why? Because my ribbon is red, guys. It's that simple. People go, it's not that easy. It's psychology, but if you get over the psychological part of it, it is that simple. I'm doing it in front of your face. I'm showing y'all right now, okay? So y'all could believe what y'all want, but yes, it's really that simple. So when people say indicators are lagging, just to let you know, they don't know what they're really talking about, because unless you're trading where orders are being pulled from the banks, everybody's MT4, MT5 trading view, I don't care what you're on, is at least 7 minutes behind the live market, meaning your candles are lagging too. So there are traders who don't even trade based off the candles, they trade based off the data, because the candles are lagging as well. So people who say indicators lag don't know that, so does the candles. Okay, so even if you use a regular moving average, it's okay, because the moving average is lagging, but they don't realize the moving average is not lagging. It's going based off historical data, and it's going in the direction that price used to be. Now, the reason you get crosses on the moving average is because it's going based off historical data. So that's why you have to have this ribbon to follow that as well, because whenever it's bending, that means that the data is now changing from what it was in the past. That's where you get breakouts and crosses of the moving average, and people say it doesn't work because technically a moving average is not supposed to get broken because it's going based off historical data. But this lets you know that everything in the past does not always repeat. Price does not stay the same through history. So that's why moving averages are the most respected indicator, and why most traders use them who say they don't work. Even they use them as well. Okay, so I'm not here just to keep defending moving averages. I'm here to explain to you why you don't have to listen to these people, and why you can continue to use them, and why you should actually respect them, because those are the most close to price you're going to get. And price itself, if you're on any platform, is lagging. Okay, so when people say indicators lag, just to break down the source of that and why that can be the case, is because all indicators are not created equal. You know, unfortunately in this market, there's people who take indicators and they treat them just like selling courses. You have people who sell courses bootleg. This is like a commodity, and people sell these things and they're not created equal. If it's coded poorly, it will lag, it will do things it will repaint, it'll do things it shouldn't do. Okay, but based off where you get your indicators, you're gonna pay for what you get. And if you go to someone and you get a rinky-dink backdoor indicator, you're going to get a rinky-dink backdoor result. I used to do it. I was in groups and people was giving me stuff. Hey, use this, and I would get cooked. And as I became more familiar with developing, and I started developing my own robots and turning my strategies into automated systems, I started to notice that, yes, the way things are created, they're not created equal. So if you buy a Civic and say, hey, how come a Lamborghini is beating me when I'm driving and I see it? It's because you're not in a Lamborghini. You paid for a Civic, so you're getting a Civic experience. And just to let you guys know, that is the same thing with robots and indicators. Now, you can get a great robot and still lose, because people also push these robots as if they're just the answer to everything, and they're not. You can get this robot and you can keep taking these trades right here. Like, let's just say you keep taking these trades down at the bottom. You're like, hey, I'm taking these trades. Like, right here's a prime example where price was reversing. Say you take these trades. Let's put the candle back on. You're going to be like, hey, how come I'm losing? But it's because you don't know not to take the trades at the end of the cloud. You see what I'm saying? You didn't know that. But however, if you know what you're doing, you could have still won this trade. But look, this broke out just to make sure it got you out. Now let's address this wick that I was talking about over here. Let me get into this wick that we was talking about earlier. This wick right here, right? This right here. We went to sell and price pushed back. How did we know not to get out? Well, we knew because the ribbon wasn't getting too big. Okay, that was the first sign. The second sign was this resistance level. This resistance level was respected. Sometimes when you see price go like this and it starts making a big wick like that, this is just the market trapping traders who thought this was buying. Because look, even the ribbon said, hey, this is a buy, but it was a short buy. And this was to trap people into this trade and get them going. Now, we were still in a sell, but the market had to make money because people were winning here. All these trades right here, people were winning them. The market has to liquidate people and make money. So people who thought this was the time to jump in the buy was reversing. They got in, and guess what? Good night, people. No, we're not buying. We're just taking you for a ride. Boom. Back to the bottom. How do I know? Well, the support and resistance indicator. The indicator is there for that. If you're not using this, you're going to have to peep this with your own eyes. But most people would look at right here as the level to watch out for, and they would get cooked. They would have sold here. Let me just show you what they would have did. Most people would have done this. I'm going to show you what they would have did. They would have used this as a level because it was perfect. and they would have sold here, and price would have did like this, knocked them into their stop loss, knocked their snot box out, and they would have kept selling, and you would have been stopped out, and your trade would have been accurate, and it would have kept going on you. Now, most people who took the sell here, if they were smart, they would have put their stop loss over here. But guess what? A lot of people don't usually use enough pips to do that. You ain't gonna put a stop loss 40 pips away from your entry, right? But I would have put mine 50 pips. That's why I just told you my risk to reward on the 1 hour was 50 pips, right? I would have been clear on this trade. But you see how they made sure they put that in there. We call that a pin. They pinned you in and then they took off on you. That's called the trap. That's how they use that. That's a pin. So just to let you know. But that's why you catch the beginning of the trend, guys. You see how we got in? You see how we got in? See how we got in ours? We got in ours right there. See how we caught? We didn't catch that first one. We didn't catch that first one, but we definitely caught that second one. And we caught a stack on it too. And we just kept trying. We kept calling it. And once you get the beginning of the trend, you don't really have to take too many positions. If you tell a robot to take one trade and it takes like the trade here, and you're in this, and for some reason it goes up here and you miss this part, you're gonna miss this trade. But we tell it to take multiple positions, and when it's the wrong position, like down here somewhere, we'll clip it. Even though you still could win this trade, it's going to be difficult. This one you're not winning. This one I don't think you would have lost this one. But this was definitely at the end of the trend. So this is why you need training, and I could teach you how to see these so that you can always catch these positions that I'm catching, like this one right here. This would have been the perfect one though, down up here. But I'm okay with it because I caught the second one. You know, you could catch 1, 2, 3, 4. There's a couple of them. Like, look, 1, 2, 3, 4, 5. Before we start getting this rinky-dinky one. So we caught these 5. Then you caught this. This is what we call sweaty trading right here. If you caught these, then you sweated your ass off. And then you come back here, boom. You get the MA cross and you get the signal, boom. The new Pyrex Vision system catches both. And boom, you eating off this regardless. So even if you caught the beginning of this new sell, you still was like good right here. Look how many pips this would have been. You would have been at 366 pips. Either way, you would have ate. And you would have been in this trade for days. You'd have been in this trade for 4 days, 3 days. The market's closing in a few minutes, so you'd have been in this trade for 4 days, winning. All right? And this is all based off just following the ribbon. So this is why, no, this is not just 2 moving averages. It's way more than that. It's training your eye to see this. When it turns colors, all you gotta do is follow the colors of the ribbon. This is called the blind strategy. You don't use anything on the chart. In the worst case, you want to use the line chart, but you don't actually need the candles. But you do use the candles for data as well. The ribbon is using the candles for data, so you don't really need to see the candles. You just need to look at the ribbon. And the ribbon is letting you know, hey, this is a big sell because it's a big line in between the ribbon. All right? Each line in that ribbon is data from a candle. Okay? And that the candle is giving the ribbon data to tell it, well, hey, the momentum's not doing this and that. And that's why it's called the bank series, because we're following the bank. People say, anytime somebody says something about bank, it's not true. Well, look at 6,000 pips on a live market and tell them to eat a nut. Okay? So the next time people tell you that, point them to this video and tell them to react to it. Tell them to do a video on that. All right? Tell them I want to see what they got to say about it, because they're lying to y'all. And it's your boy Jimmy. This video's been long enough. I'm out of here. Let me know what you think in the comment section. And once again, let me let the robot get it slow. There we go. Now, before I close, I just want to remind y'all one last time. Bank Series 1 will be discontinued in the next couple days. So when you go there and don't see it, don't be hitting me up talking about, yo, I wanted the first one, not the second one. What happened, Jimmy? Yo, I had it bookmarked. I was going to go get it. Then I went to cop it and it was gone. Because for some reason, y'all have a knack for doing that, okay? The new version is out. Get that. The older version is a little bit cheaper. You might want to try it. I don't know. But like I said, because we have to do one, we're discontinuing it, all right? So hit me up and let me know what you think. Of course, the Pyrex Vision is all of these strategies in one. The Pyrex Vision 5, I'm going to make a separate video showing the supply and demand trades that it takes and how it works. And y'all ain't got to worry about that. But overall, I'm here. I'm going to get out of here now, man. This video's been long enough. And hopefully y'all learned something from this. Okay? So just know that. Yes, you can use the moving averages, but you got to know what moving averages and what time frame and how to use them. It ain't just about putting something on your chart because someone else put it on your chart. Do not be like 90 to 95% of these traders out here regurgitating the same stuff, so my stuff don't work. Okay? And do remember, it's live trade, live chart. Holla at your boy. I'm out of here. Peace.